Hello and welcome everyone. This is Shaurya from Market Times TV, and now we will discuss what's going on in the global financial markets, what are the factors behind this, and how markets are performing. Global markets right now, if you talk about Asian markets, then they are trading with decline. Indian markets are trading flat, but Asian markets are trading with decline as most of the major indexes are showing in red. And the major reason for decline is that we are seeing some profit booking, and because of profit booking, investors are cashing in all the gains they have made in last few weeks, and now they want to enjoy this festive season. This is the week where we will see very less trading activities in all over the market, whether it's share market, commodities market, currency market. Markets won't have much lot of volume, and the major reason for that is most of the traders will enjoy this festive season, and that's why we are seeing they have cashed in all the gains this was made last week, and that's why Asian markets are trading in decline. Because if you look at the fundamental levels, then all the indicators which should point to the gain are showing that we have had a good positive momentum going on in the markets as we move ahead. Geopolitical tensions are improving, and moreover economic data is also going great, and that's why we can see that even though right now we are seeing some decline, the trend can change after some time, and even if not change right now, the next week we can see the trend changing and moving in the positive direction. Until then, we can expect very small and narrow range to be going on right now. Because if we start with the prices right now, and let's look at the Indian markets. Sensex is trading flat with just a mild decline of 0.06% at 41,656. Nifty is also trading completely flat with just increase of 1 point at 12,273. But interestingly, Nifty midcap and BSE midcap index are showing some strength, because since last few times we have seen that major index were on rise, but the same trend was not being followed in the mid-cap index. But today we are noticing a trend where major indexes are showing flat trading, but mid-cap index are showing some strength, as Nifty mid-cap index is up by 0.26% and S&P BSE mid-cap index is also up by 0.19%. So this is an interesting factor and also positive for the market, as few days it was believed and it was being concerned that why global companies, and also we can see why major Indian companies were showing such a great trend. Big companies were becoming bigger, they were getting more valuation, more proportion in the market, but there was a huge divide between big companies and smaller companies. Now it seems that mid-cap has started picking up some strength, and even experts are saying that next year can be the year for mid-cap, and we can see a huge gain in the mid-cap indexes and even mid-cap stocks next year. So you can try this by using some of your money from large companies to mid-cap companies, but be aware it's also risky, because if political situations and economic situation doesn't improve instantly, then we can see some more of this trend. So timing needs to be crucial. You need to be careful when exactly to enter into the mid-cap segment. A suggestion right now is to wait and see how things unfold even more till the next week, and how trade war concerns are developing and how economic data is suggesting more improvement. Then you can go for a mid-cap rallies. At the same time, if we start with the international markets, as we told, international markets are trading in decline, but only one index in India, Asia, is trading with green, and that is Nikkei. Yes, Indian index is trading with flat, so we can't say it's positive or negative. In fact, Nikkei is showing that same trend, and Nikkei is also trading just with a gain of 0.04%. Shanghai index has fallen today quite a bit to 0.84%. Hong Kong index again flat. Kospi index of Korea again flat. Meaning indexes and share markets across the Asia are trading with very low gain, and in fact they are trading with mild gain or mild fall, and we can conclude it to be flat. On the political level, things start to improve in US, China and UK. Between US and China, things have started going well, with Trump saying his talks with President of China being very good, and then he added that the deal between the two will be signed very soon. And now China will have also decided to remove tariff on 850 products like frozen pork and some of the information technology products, and this will start from Jan 1. So again, that is quite positive for the market and giving a boost, but that we will see next week in the coming to affect their positive gains. But till then, market is expected to stay in narrow range, as we are pointing it again and again, because this is such an important point. In this week, don't expect much volume to happen there. And at the same time, we can see similarly things in UK have also taken some positive turn, as Boris Johnson has passed his Brexit bill from UK Parliament. Although it was expected that he won't face any problem, but still, after passing the bill, things have started taking a better turn. However, one interesting factor is, even after UK passed the bill, pound does not seem to take its strength back. And one reason why pound is not rallying again is that we have seen Boris Johnson giving some negative impact. He has decided that the transition period between UK and Europe won't be extended after the 31st December next year. This means that if UK and Europe are unable to come up with any deal by the end of that time, then there can be a situation where UK will leave Europe without any deal. Although chances of that having are quite less, but still it's there, and that's why pound have factored that in, and that added risk led to the fall in pound. If we talk about the other factors right now, the economic situation is looking mixed, as economic data is giving mixed signals, but if you look at signals from US and China, then both suggest that there are green shoots. Industrial data, PMI data, retail sales data from both the countries, US and China, are encouraging. Means improvement is happening from both the sides. Consumption as well as manufacturing and labor market is very strong across the world. While Michigan Consumer Sentiment Index is also getting better. This means even sentiment is improving. However, if we look at the Europe, then we are getting the mixed signals. PMI flash figures for the month of December showed no recovery. In fact, in some cases like Germany, its manufacturing PMI number has gone down. So that is kind of a negative signal. But if we look at the unemployment rate, that brings some kind of confidence in the market, because business expectations in Germany are up, and at the same time, labor market stands very strong. So that is suggesting at the fundamental level, economy is good. Now, fundamentally, labor market is good. At the same time, sentiment has started improving. Business index of Germany, which is known as Ifo Climate Index, has improved, and other sentiment index from US, Europe, others also seems to be improving. This means that things are taking a turn for better. At the same time, inflation figures may have remained quite low, but they have also started moving upwards. This means that we can say inflation to be cautiously optimistic. Hence, we can say inflation is improving, labor market is strong, GDP is stable of US. In UK, GDP is not that strong, it is quite low, and that's concerning. But since Brexit will get removed from the hurdle, US and trade talks will improve, we can see improvement in global trade activity. This will mean in rise in exports from all these countries, and that can lead to revival in the activities, which will also can lead to more consumption, more production, hence improvement. So we can see that in times ahead, markets are expecting the things to be improved and take turns for better. And one more interesting factor right now is that we have to notice it very carefully. Central banks across the world have not reduced any interest rate, and this is an interesting factor because it points to the case where central banks believe situation will improve, and that is also taken quite positively by the market, because global central banks ranging from US, China, Japan, Europe, Sweden have not reduced their interest rate because they believe interest rates are quite low, and hence they feel that the rates which have been reduced since quite some time, they will come into effect. At the same time, political tensions will improve, so there is no need to reduce the rates further to revive the economy. Hence, they feel they have done their work, and now they are waiting for these effects to be played out. At the same time, they also feel the government needs to take action, and they are expecting actions from fiscal front. And even if that won't happen, the change in sentiment can again lead to revival in the economic growth. While if you come to Indian market and Central Bank of India, then central banks have not reduced interest rate because they are positive. They have decided to not reduce the interest rates because inflation is quite high, and since inflation is quite high, central banks don't want to take some risk, and that's why they are waiting for inflation to cool down. And inflation is expected to cool down. If in the coming times ahead the rabi crop will be good and we'll have good farm production, then food prices will come under control, and after food prices will come under control, we can see inflation to be in the check. but inflation has risk because of rising oil prices. Telecom companies may increase the tariffs, automobile companies can increase the prices, so that can lead to some increase in the core inflation. But if food prices will cool down, inflation target will remain around 4% of the RBI. So that is quite a good indicator of the condition of the country. But most interesting factor right now going on in the Indian market is also related to the RBI. RBI has decided to conduct open market operations. In open market operations, RBI will sell long-term bonds. In fact, they will buy long-term bonds and they will sell long-term bonds. So what they are trying to do is they are trying to bring down the interest rates and yields on long-term deposits. So how they will do it? If they will buy the bonds of long-term, the prices of bond will increase, and prices and interest rate on bonds, which are known as yields, they will reduce. So that's why if they will buy more bonds, prices will rise, and when prices will rise, yields will reduce. And now if yields will reduce, that can again lead to long-term lending. So long-term lending will lead to increase in the sales of automobiles and houses, and moreover the loans taken for long-term process by the companies. So this all will improve, which can lead to revival in consumption as well as investment. And at the same time, it will also help non-banking financial companies, because non-banking financial companies will also be able to lend money from banks at the cheaper rate. Because it's at the same time, it is also being noted that the confidence of banks in the NBFCs are increasing gradually. Hence, if their rates will reduce, it will again help this sector, and it will again lead to gain in the Indian economy, as NBFCs give lot of money ahead. So if they will get money at cheaper rate, they can lend ahead in a cheaper rate to unorganized sector. That's why NBFCs give money to unorganized sector. So unorganized sector can also buy money at the cheaper rate. Hence, that will again lead to consumption in the rural sector. Therefore, automobile sector will increase, investment can improve, rural sector can improve, and since the geopolitical tensions are subsiding, we can see a further gain. But Indian protests regarding citizen amendment bill can create some problem in the markets as unrest. If unrest continues, then political tensions and unrest is not taken well in the market, so that can bring some effect. But right now market is not that affected by them, and therefore we can see they are gaining. Hence, for the time ahead, we can see automobile sector to be moving. Right now we can see, we have to look at the auto sector. Then auto sector right now is trading with quite a good run. Auto sector today is trading almost with a gain of 0.91% or almost 1%. And at the same time, metal stocks are also rise because of positive indications from US and trade talks, and that's why Nifty metal is up by 0.73%, while Nifty media is also up by 0.12%. So all in all, markets are trading quite flat, but now it seems they will gain, and this trend might continue for the time ahead. Sensex has narrowed its loss, and now they are down just by 0.04%. This means very soon we can see Sensex going in the positive territory as we move ahead and as we go to the final and closing stages of the day. But even after that, we can see markets are having good run, and hopefully they will continue that. But this week, as we are seeing again and again, don't expect much movement, and we can see very narrow range in the activities due to the festive season. So that's it for right now. If you like the video, then click on like button. Don't forget to subscribe the channel, and for more videos related to markets, commodities, equities, business, stay with Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।